And Bruce says, is there a good setup for selling puts? Well, absolutely. Selling naked puts, selling cash secured puts. We call it naked puts here in PowerOptions, but in general, we assume it's cash secured. Your broker may have a different margin requirement. We just tend to do the math and do the analysis. And personally, in my account and Ernie's account, we're usually totally cash secured when we do the put selling. What are we doing with the put selling? Well, it looks like a lot like a covered call, like we just talked about with that reference to Shashir's video, didn't we? We're not buying a stock and selling a call where we have a capped upside if we get assigned, looking to make the maximum return. We're selling a put which obligates us to buy shares of stock at a set price. If the stock remains above, the put expires worthless, we keep the premium, and we can sell one for the next cycle or next week out in time. Of course, just like a covered call, this comes with a caveat. The only protection you have against the money you put up against the put is the premium you generated. Gives you a slightly lower break even, also the protection that you'd be out of the money. That's number one. You're always going to be selling, or should always be selling, out of the money puts, Bruce, below the current stock price. But again, that drop to that price plus the option premium would put you at the break-even price for the cash secured put. When we look at this structure, what can we see? Where's the max profit? The max profit naturally is to the upside. Where's the risk? The risk is to the downside. A lot of risk to the downside. We rarely, you still see stocks that go bankrupt, especially certain banking stocks, and that's the risk. If I'm at a $50 stock and I sell a 45 put, that's roughly 10% out of the money, and I get some premium. Okay, then in that case, if the stock goes like SVB or others, it goes down to drops 25%, drops 50%, and then becomes an over-the-counter, is essentially bankrupt, I'm still on the hook to buy shares of stock at 45 for a stock trading at $1 per share. That's the caveat. Okay, so what do I want to look for? I want to look for strong stocks, confident stocks, maybe even what we'd call boring stocks or blue chip stocks that don't really have a tendency over time to see volatile movements, where you don't see a daily or weekly 10, 15, 20, 30% drop. We can always be fooled every time, unfortunately, based on market conditions, news on the market, and more. And we want neutral to bullish stocks. We want to find a good premium to generate what goals we want. What's a good goal? 0.5% weekly, maybe 1 to 1.5% return per month. This roughly should be your target for out-of-the-money naked puts with strong probability on stable secured stocks. 1.5% per month. Let me just draw that in there. That's a general thing to look for. With a strong probability. We want a theoretical probability, above probably 70, 75, or 80% that the stock would remain above the short put strike price and the position would expire worthless. And of course, we've done a lot of legwork for you. What I mean by that is, in addition to the search tool, where we have some defaults set up that we'll take a look at, Ernie spent exhausting time periods, exhausting amount of time, developing what's called the monthly and weekly picks of the day for naked puts and covered calls. What essentially Ernie did is, years ago, a customer challenged him essentially during a coaching session and said, well, similar question to what you're asking, Bruce, even though you're not asking me to go as in depth on it, but asked him, well, you've got all this trading experience, you've got all these tools. Why aren't you just showing me what is the best criteria to make money in different market conditions? And Ernie said, well, essentially, that's what our default searches do. So when I go into the search, different people have different goals. So the default searches at that time were essentially from one of the tip sheets. There's a tip sheet there that talks about out-of-the-money naked puts. There was another one there that was naked puts, safety naked puts. That's now in the sample searches, looking just at blue chip stocks with lower return, but for more safety. And another just initial value search. So Ernie said, all right, I understand. I've got this powerful tool. I've got the knowledge because I created the powerful tools. I've got years and years of trading experience. I've got the background historical tools that we use for our other products that we offer, the strategy optimization and strategy search optimization, that we can run it in the background. And that's essentially what Ernie did. he ran about 80 to 85 different iterations for monthly naked puts, just looking at the standard expiration date, toggling between the different criteria we have on power options, combinations of stock fundamentals, combinations of stock technicals, range in or out of the money, delta, implied volatility range, return, all of those things. Went through each iteration and looked for which one gave the best return and the best outcome during various market conditions. This is from 2015 to 2016, just about a year, but you've got big downs, you've got bigs up, S&P around 2100, down to about 1800, up and down, up and down. And so the results of what you're seeing here are that base criteria that he developed, which, okay, so over the course of that year period, using the same criteria, equal to dollar amounts were entered, assuming $100,000, but even if you use $10,000 and put in 50% of the capital, the monthly picks of the day naked puts return was 33% for that roughly 12-month period. So we're a little bit over 2% per month. There were 4 losses and 20 wins. So it's just 24 trades, right? Because we're just doing 12. This is the monthly. So we're just doing 2 each month, 50% of the profit allocated to each one. I'm sorry, 50% of the monetary value, Bruce, allocated to each trade to keep it simple. So yeah, it was an 83% win rate. The average winners was about 4.3%. And the average losses of the 4 were 3.9%. And one of the losses was a result of 20% stock price loss limit. The largest drawdown was 6% month over month. I don't remember if it was during this period, which it probably was, or it could have been during this period. So that looks a little steeper, but they're almost identical in that case. Okay, but these are aggressive. Some of these are aggressive, and Ernie talks about, trading results, backtesting. Every market's different. Would this have been successful in 2020 during the pandemic? I think they were, and I think we showed that in a recent webinar, but you did have a very large drawdown during March. Was this profitable in 2022? No, it was mostly a bearish market. There were only certain times that you would have wanted to enter neutral to bullish positions, such as bull put credit spreads, diagonal calendar call spread, the poor man's covered call we talked about before, cash secured naked puts, and other positions. You needed to know, and that's why we use that market sentiment tool as a guideline. If I see that go to a bearish sell warning, I'm preparing to close, adjust, or protect any neutral to bullish strategy, bull put credit spreads, covered calls, cash secured puts, or just getting out of them based on what the market sentiment has shown us. Of course, after a dip, when I see the strong buy signals, I'm jumping back into these with that portion of my portfolio that I had set aside. Now for the weeklies, of course, similar thing, almost the same exact time period. Where we saw a 33% return, but the weeklies here on average over the 53-week test period was a 47% return, $147,000 ending balance, 25 losses, averaging 3.5% and 76% win rate. So lower win rate, but again, the weekly continual selling week by week by week ended up being a higher annualized return, which we expect, even though it was a slightly lower success rate. But 15% of all trades resulted in the stop loss of 7%. See, there's more details here that are going through that you want to take a look at. And that followed up your second question. How do I protect the downside? All of this was done in real trading and in back testing Ernie did. Each position for the weekly had a stop loss at 7%, and I believe it was 10% for the monthlies. So if the stock dropped 10%, he would typically just close the position. This was a test to do to see what performed best long-term with the most minimal amount of work, or what worked over various market conditions during this time with the most minimal amount of work. So rather than trying to repair a losing position by rolling, adjusting, getting cute with different ratio spreads or butterflies to repair a naked put that went against you, just close the position, accept maybe the 7, 6.5, or average of 3.5% loss off 24% of the time, and you still come out ahead of the situation. And he does mention here too that you may want to consider doing other things in addition to the stop loss, because some of the positions that have come up may be a little bit more volatile. The weeklies are high volatile positions. Upstart Holdings, personal, not predatory loan, but a personal loan service, C3AI, yeah, that's in the news, right? And Carvana, of course, which is on tough times right now, is one of the other ones there. You've got Carvana, CarMax, and things like that. They're not having the best of time. So that's basically one thing we could look for. And you could always be more conservative. So let's just go to the search. We see some aggressive ones here. That's just the top 3 that's updated day. That's the quick look. But I can always come into the search. Let's just go to weekly picks of the day. And as I mentioned, we see some high volatility positions, but they're showing a high naked yield. Not as good of a probability I want. So let's get what we're comfortable. And this isn't necessarily you, Bruce. You don't have to be comfortable with this. I'm saying what I'd be comfortable with potentially just as the onset. Not to say in spite of Ernie's testing, because he is the master and he usually proves himself right more often than not, where I'm usually wrong on certain things and directions. But hey, I want a better probability. I want to go to at least a 70% probability above. A theoretical probability the stock will remain above my sold put at expiration. Now, I know I'm going to have to give up some of that profit because the ones that are closer in are going to do that as well. Okay, we still have some good positions here. Carvana comes back, but hey, it's deeper out of the money with a 75% probability, still a 3.1% return. We're in the weeklies. Again, as I mentioned in the previous discussion, that's going to be lower as we lose the 2 days of time decay to Monday. I run this search here, we're going to see that. Ally Financial, Ring Central's in there. Okay, so these are a little bit less volatile, but still offering a good premium. Now, what are the other basic criteria? You can see that right over the side. Looking for basic bid-ask spread, minimum option premium, at least 2% out of the money. I could increase that as well, but because I adjusted our probability now, that also forced the range out of the money, I'm sure, to be greater than 2. Let's see, do I have it here? No, I don't. Let's add it very quickly for our discussion. So I'm going to go into the see more or less columns. Everything I can screen for on the search, I can see. I want percent in out of the money. I'm actually going to change the column order here to put that closer to the probability of percent to break even. There we go. All right. So the range out of the money, 11%, 6%, 9%, 3.4%. That's for that CRISPR one. What's that Ally Financial? That's usually lower volatility. 72% probability, 3.5% out of the money. So the volatility I don't have here. I'm sorry, I didn't have the IV added. That's going to be a little bit lower in that case. But that's still a good 1.2% return. Still above that minimum 0.5% we discussed. All right. Team is in there too. That took a big drop recently. In any case. So we've got that. If I wanted to limit the implied volatility to say to be less than 0.75 or maybe less than 0.65, I can absolutely do that too. Of course, we are avoiding stocks that have earnings between now and expiration. We check the box for not between now and expiration. We're looking for stocks in an uptrend, okay, and have a positive earnings per share growth for good management. Normal things you'd look for in a neutral to bullish strategy as well. All right. But let's say you want to see more familiar stocks. What could you do? All right, the market cap. I want to see maybe just mid to large cap stocks. It shows you here, says this is measured in millions in PowerOptions. So the mid cap range starts at 2,000. Go a little bit higher. I'm going to go 2,500 to blank just to see mid to large cap stocks. We already limited the implied volatility. Let's see how this reduces somewhere. We had 4 pages of results a moment ago. And we still have 4 pages, about 50 results, and we see some things may have come out of here. I could let's just lower the implied volatility to be lower. Let's put it down to 0.5, more in a moderate range. Okay, we took it down to only 3 pages. We lost 6, we still got 44 results. Can I say this is a better search than Ernie's, Bruce? No, absolutely not. I can't. Can I say that maybe these stocks here on this screen are less volatile than the ones we saw in that search as well? Probably. Can I say this would have been successful week over week? Well, I can do a test real quick. So let's go ahead and save that, and we'll call it lower volatile weekly POD. May 19th, open forum. Okay. Does it help? So I put the right thing in. There we go. All right. Now I'm just going to spend a few more minutes on this, and then we're going to jump back in. Now that I've saved that search, what am I going to do? We're going to go to backtest. If you're on the 14-day free trial, you have 3 months of backtesting available to use the historical search tools, testing our defaults or creating your own search and then running that. Or the search by symbol. I could just search one stock at a time for naked puts on a given date. Let's see, today's the 19th. Let's go back just to the beginning of the month. And that was a Monday. So let's go to May 1st. And we called this, lower volatile weekly POD. Let's go ahead and submit that. This might take a minute or two for the results to come in. Okay, that was pretty quick. There we go. I mentioned CarMax is in there. Now, this is my criteria. Adjusting the volatility, adjusting the, market cap, and that's it. So we only have 13 results here. And now what can I do that we have these results? We see common names now, as I mentioned, CarMax, UAL, Micron, Blackstone, Wynn Resorts, PayPal. So May 1st to the expiration date of May 5th. Now this is the one that's going to take a while. What's happening here is it's calculating the end result of these positions. And what I can see here, Bruce, is that we didn't do too great, but we didn't do too bad either. So all of the losses are minimal. And this is assuming no management. We just left them open all the way. Only about a 63% success rate with a return of minus 0.5, where SPX was down 0.8. Okay. So or 0.8, excuse me, 0.8, yeah. So, okay, I'm still beating SPY, but this isn't actually a good result for the first week of May. Oh, shoot. Sorry, folks. Let's do it next. The following week. So that was May 1st to May 5th. Let's go May 8th to May 12th. And again, we're uploading all of the historical data right now, so it's trying to interact with tables that are getting a lot of data thrown at them as well. All right, we have much more results. 19 results that matched my adjustment to the default criteria. Let's go ahead again, calculate group results. Got some other big ones in here now. Alphabet, On Semiconductor was something I used to use for Mary Put. Advanced Auto Parts and Whirlpool. Much better percentage-wise. 13 out of 16 were successful. So that's going to give us 81%. And we have a positive return of 0.4%. Keep in mind that's for the week. And SPX, we're about even with QQQ. SPX is down 0.3%, so we're still on top, beating SPY for the month of May. Last cycle, this week, May 15th through the 19th. Let's change our date. In the historical suite of tools, May. Nope. It just shows the expiration date. Let's go ahead and submit that. Sorry about that. All right. Excuse me, ladies and gentlemen. What have I got here? 28 results. The market has been getting stronger, so we're having more stocks that match the fundamental and technical criteria. 28 results. Let's look at that top 28, see what we've got there. What names do we have? Chewy, that's interesting. Signet. CarMax is still in there. Marvel Tech, Shopify, Chesapeake Energy, AMD. Okay, so we have a high success rate of 91%. 20 out of the 22 trades expired, not necessarily for full profit, but they were still profit. Some of them might have been a little buyback cost, but still ended up, that was okay, but still might have been a profit. Only lost on 2. And so an average of 4.8% loss on Chewy. That's why I said it was interesting, because I remember that last week of Chewy. And only 0.2% loss here, it looks like, on Signet Jewelers for the decline in price. So, 5% or 2, an average of a 2.5% loss, but works out to be an average return of 0.4%. And again, that's for the week. Didn't outperform SPY or QQQ, but we've had a strong run this week. We're doing a naked put, so we've got a capped gain. We'd expect that. Okay, well, that's all well good. What do we have again? 63% success rate for the first week, 81% success rate for the second week, 91% for the third week. A loss of 0.5% for week 1, gain of 0.4% for week 2, gain of 0.4% for week 3. So we're up 0.3% for that 3-week time period. Well, I never like to check with the master, but hey, gave some advice and some instructions on if you don't like the results you see because you feel they're more too volatile, in those weekly or monthly picks of the day, give you some ideas on what changes you could make. Increase the probability, lower the implied volatility, maybe look for mid to large cap stocks. But it's not fair for me to say that that's good. I just gave you an idea of what it was. Wasn't great. I don't think it would have met your goals. You told me your target was around that 1.5% per month. This month so far, first 3 weeks in, adding up the loss of 0.5%, then 0.4 and 0.4, we're only up 0.3%, assuming similar money allocation. If we're going to be fair, we got to be fair. What would the weekly picks of the day have done on May 1st? That went to the 15th. I'm sorry, folks. Let me try that again. There we go. All right, let's submit that. We got to do the same thing comparatively. Now we see some, CarMax is still in there, Airbnb, Trade Desk, Teladoc, Jinko Solar. Wynn Resorts is still there too. These are still bullish stock positions. Foot Locker's in there, but that's not for a week or two where we see that decline. All right, let's calculate group results here. And we have a 67% win rate on Ernie's weekly picks of the day compared to 63% with those adjustments I made. Average return is a loss of 0.1%. As I mentioned, QQQ up 0.2%, SPX down 0.8%. So already, as expected, he's beating me. Better win ratio, 67% versus 63%. Better loss, we want to say that, only minus 0.1% on average for those top trades versus 0.5% on what I put in. Fantastic. Back again. What do we do now? We're going back to May. We got to take our next week, May 8th to May 12th. Eventually, I'll put this in a table for you, but let's just keep going with this, and then we'll jump into our next live questions. Top 30 results. We only show the top 30 because likely you're not opening 40, 50, or 60 naked put trades at a time or cash secured puts. But just to give a gauge, it gives a wide sample size, as I mentioned. That's what we kind of want to see. I move some of those. All right, so we're going to run this test now. Remember, for mine, we are at 81% success rate for this cycle for a 0.4% return. Ooh, see some declines there, but they're not big. Oh, there's 1.8% loss. All right, 23 out of 30. So only a 77% success rate and a positive 0.3% gain compared to 0.4%. So still right in the wheelhouse, but he started off with less of that loss. Still beating the S&P, but lagging a little bit behind QQQ. Again, that's expected because we have a capped gain on the position, but we had an 81% success rate with the adjustments, but a 0.4% return. Here's 77% with 0.3. Last and final week, and then we'll get off this discussion. Maybe we'll point some directions there for Bruce as well. So let's go ahead and run our last cycle here. And that was the 12th through the 19th. Oh, I'm sorry, 15th through the 19th. Right. Now let's take a look here and see what we've got. Top 30 results out of 90. Ooh, Maxian Solar Technologies. There's that C3AI, Wayfair. I don't think these were in that other search. Zscaler, I think, was. But it's irrelevant what was and what wasn't. Let's just look at the overall numbers for a good idea. Seeing some good returns. Ooh, yeah. Well, pretty close. 87% success rate for the weekly picks of the day with an average return of 0.6%, which means loss of 0.1% in the first week for the weekly picks of the day, gain of 0.3% for the second week, gain of 0.6%, total gain of 0.8%, averaging those 3 weeks with the weekly picks of the day that Ernie created and the adjustments that I made would have only had us at a 0.3% return. Now, on this one, again, I had a 91% success rate. Why am I making less money? Because I lowered the volatility and increased the probability. I'm further out of the money, expecting less. These are considered more aggressive, and we saw that, but because of the larger premium, he was right 67% of the time on week one. I was only right 63%, but he had less of a loss of only 0.1%, where I was at 0.5. That extra volatility can help, but in really volatile downturn markets, it can really hurt too, because the ones that have more implied volatility are going to drop further than those other stocks. We had the adjustments we made had the higher return and higher win rate in week 2. In week 3, we still had the higher return. The higher win percent return at 91% versus 87% for the weekly picks of the day. The weekly picks of the day had the higher return of 0.6%. Okay, so that's some insight, some ideas on where to start, what criteria to use, where to be a starting point. And we can have other discussions later on, of course, that'll come up, Bruce, related to that. And Mike says, good presentation for cash secured puts. This is the parity of the monthly covered calls. What I showed you, Mike, would be the parity of the weekly covered calls. Similar criteria are used, but a little bit subtly different, actually. Ernie found that some changes in the covered calls worked better, but we were looking at the weekly naked put, so the parity would be the weekly covered calls. Close to it would be the parity, but they are subtle, different criteria. But even if you're doing the monthly covered call screen or monthly picks of the day on PowerOptions, you're going into covered call and search and using the default, monthly picks of the day here. What changes could you make if you thought these were a little bit too risky? Stone CO, Cassava Sciences, Array Technologies, names you don't notice. How can we change it? Again, drop that implied volatility, let's say down to 0.65. Look for a higher probability assigned. I think we did 70, might have been 75. We're going to stick with 70. And last but not least, change, maybe put that market cap in there. Still avoiding earnings between now and expiration. So we had 47 results. Do that Stone still in there. Pacific Biosciences, Lithium, DoorDash, Datadog, still some volatile positions. UAL is in there again on semiconductor. It's down today, but it's been on a run, as most stocks have. Goodyear Tires, some names you recognize now. Filtered out some of those unknowns by adjusting implied volatility, of course, and adjusting the market cap. But what we showed would be expected returns similar to the weekly covered calls that we just covered, the weekly naked puts, Mike, not the monthlies. Monthlies, you'd see a different return.